Welcome to StockOdds podcast. I'm Dave Singh here with Rob Friesen, getting ready for the week ahead. Good evening, Rob. How's everything?
Oh, good evening. Not too bad. Probably better for you, hey?
Yeah, I'm
Where are you hiding yourself?
At some unnamed island.
Okay, we don't want to leak out your whereabouts, just in case you mention anything on the podcast that's very incriminating.
If there's random ukuleles in the background, there's a hint, right?
However, wherever you are, whatever island you're on, I'm a little concerned that you will get home. I mean, with all these flight delays and cancellations, like Saturday had 657 flights in the U.S. canceled, 7,267 delays. Sunday, so far, 912 flights canceled and 6,378 delayed. Of course, you're not going through Chicago if you're near an island. So Chicago had 40% of all their flights delayed, 12% canceled. So it's quite something, eh?
This is why we need automated everything everywhere all the time. Drones and robots and AI.
Well, yeah, I mean, when we don't need people anymore, the world will be a wonderful place, or not. This is the question. When they turn on you and say, "Well, we don't need humans anymore either," really. So, all right. Well,
we have a kind of a dull month because people are out and about and low volume, fewer traders around. But we'll have the end of the month to look forward to, and we do have mid-month seasonality coming up. So I have some stuff on the almanac for that. But oils come down below 90. The VIX is still staying low, and the futures are kind of flat. So maybe you can start from there.
Well, we could. Why don't you rattle off a little bit of the seasonality stuff first? Sure. Just like the ETFs that are favored and maybe ones that are sort of not favored. Does that start mid-month, or do we have anything?
It starts on Thursday. Thursday starts our mid-month seasonality window.
Okay, well, why don't you rattle that off, sure, just so we have perspective on what might be coming, and we can talk about what is now.
Sure. For the entire month of August, the SPDR is expected to do only 0.7%, but mid-month it's supposed to be down minus 0.27%. So it's still supposed to be kind of soft in the middle of the month here, and the IWM is even softer than that, minus 0.54. So slightly down mid-month seasonality. And the ETFs that are expected to do slightly better are things like gold, GDX, GDXJ, silver, utilities, and staples. So it's a defensive stance. Those are the longer ones. But then the shorter ones are energy, XLE, XOP, biotech, XBI, SMH, XLF, financials, technology, XLK, QQQ, discretionary. So the risk-on stuff tends to be better for the short side, and your defensive stuff is better for the long side, like utilities, staples, and gold. So that's the theme that's showing up from the almanac so far.
Starting on Thursday, running through the following Wednesday, correct?
What is it, the 9th, 10th?
Yeah, 9th through 14th is the way that our seasonality is displayed. Now, that arguably, people can design whatever seasonality window they want. I mean, we used to just use sort of the 9th, 10th, and 11th business day of the month, but on our dashboard, it got expanded to the 9th through 14th, just because it's probably better coverage, like when you have weekends involved and things like that, right?
Correct.
So that's how the data is. Anyways, from the close of business on the 8th day until the close of business on the 14th day. That's how it's designed.
Good.
So with that, being said, we do see a theme here that, okay, maybe Thursday, gold gets a bit stronger and stuff, and maybe some of the risk on ETFs get a bit weaker. What's happening right now in the market? Let's just take a look.
It's pretty slightly down to flat.
Yeah, so we're only down minus 0.08 on the Dow Jones. We're down 0.14 on the S&P. We're down 0.10 on the NASDAQ, and the Russell 0.13. Now, bear in mind that all of these are at interesting levels. We've been running a little bit of a kind of a pennant formation here on the Dow Jones. We had an amazing reversal on Friday with the jobs numbers. And, one thing about that, we saw amazing job growth. But remember that a lot of this job rebuild is still because everything was shut down over the pandemic. So it sounds great, but this isn't like brand new job creation because we just started, a base on the moon and everybody's moving up there to start mining the moon. This isn't like brand new out of thin air job creation. It's the return of people getting back to work. So let's put that in perspective. And then if you look at it long term, the job growth might not be sustainable. So we would have to start looking down the road and say, okay, if there really is a recession argument, then no, that could affect employment again. So I think this is coming out of the hole and maybe not sustainable. Sure. We do have arguments for the short term of lower recession risk, but then there could be arguments of a harder landing later. So the dollar is to stay strong near to immediate term, but that's putting tremendous pressure on other countries. We see what's happening with Sri Lanka. There's other countries possibly to fall because of systemic risks. Argentina, El Salvador, Tunisia, Ghana, and my birthplace, Kenya. Those are all at risk. Now, some of the ones that have been taken off the risk category, Brazil, Mexico, and Indonesia, are now a lot stronger because, their balance sheets better, not as much exposure and debt as they had before. Also, any commodity exporters are going to be stronger, right? So some of those, the 5 countries I mentioned earlier have risk of government debt distress. And that, it could be a surprise coming anywhere. Mm-hmm. We'll go into some other things in a minute, but let me finish up with some of the futures here. So when we look at, you mentioned possibly oil getting weaker on Thursday. It's way down off the high, and it's gotten pretty close to a support level that we had that was previously resistance in October and November of 2021, because we had that rally. Remember September and October, we had a big rally on oil. Mm-hmm. Well, we collapsed in December from those highs, and then we rallied all the way back up, and then in February 24th, obviously with the war starting, we shot up to the over the $130 a barrel level. We've come all the way back, and we're sitting at the former resistance level from October or November. So I'm thinking this is an interesting level that we could rebuild back on, because the one thing that's pulled it down is the recession risk and the lockdowns, in China, and demand destruction and things like that. But we're not out of the woods. We're going into hurricane season. There can be disruptions that way. So I would say that, it did show itself a little bit green there on Friday's reversal, and so far today, pre-tomorrow's trading here, the overnight, we're looking at up slightly on crude. So I'm thinking there could be a rebound in the cards here on the short term on crude. That might take us up into the Thursday. So I'm not gonna shout against oil at the level that it's at right now, just because it's pulled back so much, right? Okay. Looking at looking at the bonds, we pulled back significantly on Friday. Why? Well, again, this more aggressive interest rate thing came back into play. So we've gone through a number of cycles here where we factored in the more aggressive hike, and then we all of a sudden started to say, hey, well, maybe it's done after September. And now we're back on, well, with the jobs thing, what is good is bad, right? What is good is bad. So this is why we call the show Odds and Ends, right? It's like, what is good is bad. So, that's back on the table that, they may have to be more aggressive. So this is the interesting back and forth tension that we experience here. Going into metals, interestingly enough, gold has had a recent rally off the bottom here and just pulled back on Friday with again, that relates to the more aggressive Fed hiking. Gold tends to pull back, you see. Silver, same thing. Copper is an interesting story because it had if you were to look at copper on a weekly chart, I find that really interesting because it pulled back all the way into the 2018 resistance level and found this support there and sort of bounced. The last 2 weeks, it bounced up a little bit from that. So again, it's an interesting story on copper. And where are we with grains? We've had probably the biggest story is that wheat, because wheat, like globally, right? And then we had the disruption in Ukraine and all that. Now that shot up huge right in middle of February as the war started. We had wheat just skyrocket. And then it's come all the way back to its sort of September through the end of the year consolidation area there. So it's kind of erased all of that war premium. So I find that really interesting. Okay, over to you. Anything on the earnings side coming up that you can see?
Most earnings have passed. I think there's a couple this week. Disney,
okay.
AIG, and
AIG,
Tyson Food will show like food inflation.
Okay.
Financials, Disney, the consumer. It also ties in with the economic reports for the week.
Yeah, let's hear that.
Mostly centered around, let's see here. On Monday, we have 3-year inflation expectations. Tuesday, productivity. Wednesday, core CPI. That's a good one. And then on Thursday, producer price index. And Friday, University of Michigan consumer sentiment. So the themes are inflation, consumer sentiment, and productivity. And then Disney kind of ties in with that, the consumer sentiment and spending ability. So just a couple more earnings there, but not most of them have passed, I think.
Okay. I'm gonna be leaning into more the climate related stocks a little bit because the Senate passed the $740 billion tax. Now that goes over to the House, and that's on the 12th. I guess it probably will pass. So I think it's safe to say we can kind of count on it. Now, I mean, it was kind of 50-50, and Kamala Harris was the deciding vote, so it's now 51-50. So you can see how divided it was. $64 billion to Affordable Cares Act. So I'm going to kind of favor healthcare. I'm going to favor some of the climate stocks, solar, stuff like that, just because of this whole thing. $370 billion is climate. Now it's over 10 years, but at the same time, people are always looking for anything to buy those kind of stocks. So in the long run, I like what Will Kane had to say. look at the name of the bill. Whatever it is, you can be sure the legislation will do the opposite.
Yeah.
So it's supposed to be an inflation reduction type thing, but he's saying whatever the name of the bill is, you can be sure it'll do the opposite. So even Bernie Sanders attacked it, said 740 billion impacts inflation about 0.1% in either direction.
Yeah.
You can't make this stuff up. It's so hilarious. But anyway, but the sentiment can change a little bit, right? So keep that in mind. Also, we had a ceasefire over in Israel. It was a 3.5-day war, actually. That wasn't. I don't think it was well reported by Western media. But over 935 rockets were fired from heavily populated areas in the Gaza over towards Israel. The Iron Dome blocked 97% of it probably. But anyways, some of the media actually has a few things wrong. Like some of the rockets, you can actually see the videos where they shot them up and they actually kind of came down in heavily populated areas of Gaza. So that was not Israeli fire. That was actually the hostility fire against Israel that ended up landing in their own area there. So one of them was on a school. So just so you know, like not everything reported is always accurate. Mm-hmm. You got to dig around a little bit more, okay? Anyway, what else is on the table here? Oh. Yeah, you were bringing up a little bit about what I mentioned on the last show, which was as you approach seasonality windows, how meaningful the divergence can be. The things that are the most outliers ahead of windows. The same would be true if you were, collecting dividends. Ahead of time, you're looking for things that have diverged that might be accumulated going before their dividend or even, going into XD. Same thing with, pair relationships. You're looking at things that generally stay together in a very mean reverting, and you're looking for them to be mispriced, to be displaced, to have diverged. Friday, an example of we had the first Friday of the month seasonality. Mm-hmm. And what did we have? We had an amazing discount. Well, the edge goes to those symbols that gap down the most, that are things that people tend to like to, to buy, to go into. And so your edge really is on the buy side with a possible hedge standing by, because you don't have a guarantee that it's going to bounce. But we have largely these gap fills that occur, some catalyst, a gap, usually down if it's, some form of bad news, or even if it's good news that could be bad, like we had, gaps down, and it retraced. It filled the gap within, I think, 40 minutes. And largely, the gap ups could also do that and pull back down. It depends whether you are in a massive discount and it's the first day it's turning around, or whether it's just sort of chopping back and forth. And we're kind of in that phase right now with these futures chopping back and forth in a particular area. Going back to looking at the S&P, it's sitting on the daily here. It's sitting right in the same zone, right in the middle that we had from May the 27th to June 8th. It's right there in the middle, kind of going back and forth. So it may break out to the upside. It may break to the downside. And so we've had this conversation before, last week. And here we are again, still the same conversation. We're sitting here. We don't know which way we're going to break. And we've seen a lot of chop back and forth over the VWAP, a lot of chop back and forth over the previous day's close. And we'll see what happens, because we did have some good movement on Friday, and we ended up closing at a point where, we're kind of right in the middle of that range. So fasten your seatbelts, and we'll see what this week holds. It's always good to get your bearings on a weekly basis. Take everything that happened up till Friday. Look at it from what happened on Friday, but also what happened for the week. Get your bearings, think clearly, position yourself, and come into the new week, with your if-then statements, with your key symbols selected, and so on. Okay? All right. Well, have a good time wherever you are, and safe travels. Okay?
Good luck. Thanks. Bye.
All right. Cheers.